Hey, gang, this is Carl White broadcasting out of the studios this morning over here at the Scotsman's Guide home headquarters. And you're listening to Author Showcase, the podcast powered by the Scotsman's Guide. And this, what we do here at the Author Showcase is we take the authors of the magazine, the Scotsman's Guide, and we take a deep dive into them. And as you know, that there's a commercial division and a residential division of the magazine that goes out. And this article was in the November issue of the residential, even though I suspect this could definitely go into the commercial too. So I'm speaking with Chris Delamonte, who is out of Manhattan, New York, the happening place of the universe. Chris, good to see you, brother.
Thanks for having me.
All right. And you're the CEO and co-founder of Sonar. We'll be asking about that here in just a few minutes. So the title of your article is AI is already shaping the industry's future. Boy, and is it. So how about a like a 30,000 foot view of how AI is shaping the industry's future here, Chris?
Yeah, absolutely. I think AI has become such a buzzword in all of technology and throughout so many other things we're doing in our lives these days. But certainly, this is definitely one of the industries that it has the potential to really improve for not only borrowers who are trying to get a mortgage and who typically don't love that process, but also for everyone working in the industry. And there are hundreds of thousands of people supporting the mortgage industry who can see many of their manual and maybe quote unquote annoying daily tasks potentially get eliminated here and speed everything up for everyone.
Yeah. So are there and we're going to do some deep dives into some specifics here, but are there any particular examples of some AI driven tools that are enhancing, like, say, the workflow efficiency in the mortgage business right now?
For sure. Like the way I like to think about this, and certainly, I think you can go even deeper, but I think of this as things that are improving the customer journey, things that are improving the underwriting process, things that are improving the processing of the loans. And I'm going to focus mostly on everything going on until a loan gets closed. I'm sure that there are AI implications later on in servicing and how you can give people an even better experience as they live with the loan over the life of the loan. But I'm going to leave that aside for now because that's outside of my area of expertise and what I think about day to day. But if you think of let's take, for example, underwriting, right? So a lot of systems are using OCR technology, which allows them to, scan documents intelligently and quickly. And that is already a form of AI, right? So I think there's a huge buzz in AI right now because of all the LLMs, the large language models that are being exposed to the world with ChatGPT and Google's Bard, and then Anthropic has its own, and there are a few other companies that are a little bit smaller, but also building really cool platform level tools. But AI has been pervasive in our lives for already many years. We just didn't necessarily think of it that way. Everything from any owner of an iPhone or Apple product using Siri to ask it questions, and that's artificial intelligence, right?
Yeah.
And so we've been seeing AI help, with everything from document recognition, document management, fraud detection, and the automation of certain tasks already in the last few years. And I think what's going to happen now is a rapid acceleration and escalation of the capabilities that all the systems have to make things happen faster and potentially reduce fraud, right? And so I think there's two elements here. Is like, let's make this easier for people, and let's also make it safer to lend for lenders. And when things have less risk, typically they become less expensive. So this should all trickle down into lower interest rates over time for consumers, which is a great thing. Obviously, in this market, we know everyone is particularly sensitive to where rates are.
Yeah, I guess less fraud, there's less risk, and with less risk, there's you don't need as high of an interest rate to turn a profit.
That's
So
right. That's
yeah,
right.
good stuff. So I'm still seeing some companies give a hesitancy to embrace the AI advancement. What do you think that is?
Um, I think there's still an element of uncertainty of how it all works. And so when people see something that they can't fully understand, there can be a natural hesitancy to start using
Mhm.
it. And I think this is actually really important. And it's something we should touch on in a little bit, which is kind of the ethical side here of AI. And how do you know that how the AI made a decision? And putting aside mortgage for a second, there are many examples of AI companies not being able to explain how the AI came up with something. And so, in a bringing it back to mortgage, in a in an industry that's as heavily regulated as ours, there's a natural reticence to not be able to explain why you did something. If a regulator were to say, "Hey, why did you say yes? Why did you say no? Why did you put this condition in?" and you can't explain it, that can lead to problems. And so I think um, as these models become more transparent, as people understand why decisions are made with more clarity and potentially even with audit trails, um, people will start feeling more comfortable with the use of AI to help them with certain parts of this process.
Yeah. What what are the most significant changes that you've seen in the mortgage industry right now? That's a result of implementing AI. Like where's it moving the needle in our industry right now?
Look, I don't think it actually is yet. I think it's coming, right? I think this is kind of where we're looking at at the AI wave come towards us and trying to all make sense of which parts of this we're going to like and which ones we're hoping that people will build into the tools that we use. So I think, like I said earlier, I kind of look at this from the customer experience, underwriting, and processing lens. So from a customer experience, customer journey lens, I think, you know, you're going to start seeing a lot of AI chatbots in, you know, funnels in the point of sales. So there are some companies that have already kind of shown what they're working on in that regard, and I think this will become pretty widespread because it's becoming easier to train the chatbots to answer questions correctly. OpenAI, the company behind ChatGPT, had their developer day a couple of weeks ago where they went out and showed how everyone can create what they call GPTs, which is go and train their own chatbots to serve specific purposes. So, if currently, a borrower is unsure about why a question is being asked or how they should answer it, or what the implication might be of one answer or another, typically they want to talk to a human. But if they could quickly ask that question, to a bot that had the answer, right? Obviously, the answer has to be right for this to be useful, and that's something I really would like to harp on actually with AI. Is like there's so many people working on so many different parts of AI, but I think it's easy to just throw spaghetti at the wall and see what sticks. But what the only thing that's going to matter is what actually stuck, right? What made this better? What made this more useful? What made this easier for people? And so I think that's one example of something that could stick, right? If I, as a borrower, and we all live and breathe mortgages every day, but most borrowers are probably going through this process every 5 years, 6 years, 7 years on average. So they can't remember exactly how
Mhm.
one question might affect the rate they might get, or what how this might affect which programs they qualify for. And so being able to not have to wait for somebody to get back to you on the phone, getting an answer immediately, within 10 or 20 seconds, I think can make things materially easier and more seamless for borrowers.
Yeah, I couldn't agree with you more on that. I've always thought people don't care where they get the answer from; they just want the answer and they want it now. So, like
That's right.
you know if 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 I could provide the lottery numbers, either myself or through Chat GPT. I don't think anybody cares whether it's Carl or Chat, just as long as they get it by Saturday in time to buy those numbers. So I don't think people care where it's coming from as long as it's accurate.
Yeah. Another example, for example, if we kind of zero in on processing, right? A processor would typically be gathering documents and checking that they're real, and checking them against a list to make sure that the complete list is complete. And then typically there is back and forth, right? It's rare that things get done, one and done in this industry.
Yeah.
And so that whole process, I believe, will get sped up dramatically, in the very near future, because as people drop in, files online and those files start getting sorted automatically. So not only, with data being stripped, but actually data being analyzed. And so it's going to become very clear that the AI will understand and learn from what, let's say this is a company that has underwriters. They'll learn that, when these documents are present and these numbers are present, the underwriter typically says, oh, I need last year's W-2 as well. And they're going to just start asking you immediately for last year's W-2 in advance of that. And so, and not only that, but they're probably going to be able, because these are not highly regulated parts of the process, they're probably also going to just draft an email and send it to you saying, dear Carl, could you please, as in addition to the documents you just, uploaded, could you also please send us last year's W-2 as well, or your wife's W-2, or whatever it may be, right? That it thinks that you're missing. And so if you can remove the human side of this, which typically a processor is working on many files. So it's not necessarily that this takes, a whole day to do, but you may be, 20th in the line. And so if you can remove that kind of bottleneck and get back to people immediately with what other documents they need, I think you're going to start seeing turn times accelerate dramatically. And ultimately, one of the, I would say the two things that probably we have found over time annoy customers the most are kind of the endless back and forth, because it feels like death by a thousand cuts, and just the overall time it takes, because the longer you stretch things out, this is a hugely important time in people's lives when they're buying a home, and this uncertainty of whether or not their loan is going to get approved or not. If you can collapse that by 50% or more, and make the average loan in the next cycle take 20 days instead of 50 days, I think people will become much happier with the overall process, because they weren't lying in bed worried about whether or not they were going to be able to buy the house.
So it seems pretty evident of how this is going to change processing and underwriting. How has it, or how do you anticipate it to alter the role of the actual mortgage originator, the loan officer?
I'm speaking for the next few years here, not for 20 years from now, right?
Yes.
But for now, I don't think loan originators need to be worried about, whether their job has a reason for existing. I think absolutely, loan originators will continue to do what they do best, which is to help guide customers and understand the process and make better decisions and make people feel, warm and fuzzy that the choice they made here, which is their biggest financial liability, right? People's mortgage is by far their biggest, typically it's the biggest financial transaction in their life. It's usually the most important one. Mortgage debt is, consumer mortgage debt as a category is larger than all the other forms of credit combined. So if you add up credit cards and everything else where people borrow money, and you add them all together, it's usually less than their mortgage, which obviously makes a lot of sense. And so it's such an important decision that I don't think humans are going to trust an AI to advise them on which mortgage they should get anytime soon. I think there is an element of trust here that's huge in this industry. And so what I think will happen actually is that it will actually increase the positive impact of trust building that loan officers can have, because they're going to spend less time double checking what their processor might have sent them, and they're going to spend less time trying to figure out who they need to call next, because they'll have an AI assistant probably telling them, here are the people that you should call next, and here's who you forgot to respond to yesterday and whatnot. And so I think this is going to actually improve customer experience dramatically and allow loan officers to do the most important part of their job, which is helping people better.
Yeah. More time connecting and less time looking for page 3 of the bank statement.
That's exactly right.
Couldn't agree more. You mentioned something a few minutes ago, and I hadn't really thought about that, but we know for sure that AI is biased, right? So there's programming biases in it, for sure. You can ask it certain questions, and it'll well, I won't go ahead and get to examples because I don't want to get down a bunny trail, but it for sure has biases. How can we ensure, or can we ensure, or is this going to be an issue to ensure that the AI algorithms in lending are not biased?
Yeah, this is one of the most important questions, and I'm confident we're going to end up in a good place. I think right now we're just scratching the surface in terms of what these algorithms can do and how they can be audited. And so we have it's really critical that we make sure that the AI actually helps reduce discrimination, because there is discrimination in the system, and there's a lot of regulation in place to try to minimize that, but it exists. It's not zero, right? And so we have to get closer to zero thanks to the AI, and we have to make sure that it's actually helping and not perpetuating this problem. Transparency is critical in that regard. What data is being used to train the AI, firstly, and then what data points is the AI being allowed to use to help make decisions is going to be the next big step. And so you have to remove, all elements that could be discriminatory from the training data that it's given. And then you have to make sure that it's also not being given data points that it shouldn't be using to make decisions when you're asking it for help. And so it's really critical to have very strong guardrails there. I think we're still, I think this is kind of staring at the horizon and the future here, and we're not quite there yet. There are things that, the AIs that are being used. Well, there's a few things. One is that, most of the loans in the US are agency loans, and there are rules and their own algorithms that are helping decide which loans qualify and which don't. And I don't think that that's changing anytime soon. And so even if there are more and more data points that are going to be able to be used, that's probably going to be for non-conforming loans first, where lenders are deciding to make a loan and keep it on their books. And so since it's their loan, they have more leeway in, how they want to underwrite someone and what they want to use. And so, in today's world, you're already able to look at, for example, there are companies that are working on software that will allow you to, for example, analyze bank statements and try to infer things from the bank statement that might help you determine the riskiness of a borrower. So it could be, it could help them understand your income better just by seeing how and when you're getting paychecks. It could be that they want to understand how you're spending your money. There may be patterns and this is not something that I've spent any time working on, so I don't want to even get into details, but there could be patterns that they may be able to correlate with higher risk or lower risk in how you spend your money. There could be, they could assess how much you travel. They could assess, there's all sorts of things that they could glean just from analyzing that one document. And I'm sure once you kind of expand that to all the different documents that are involved in the mortgage process, that there will be groups out there that probably figure out interesting ways, and hopefully are not discriminatory at all, ways of assessing risk. And this should actually, I think in general, this is going to help, by the way. I think these alternative underwriting methods are meant to actually help qualify people that may not qualify for government loans, but that really are credit worthy. And you're going to be able to prove, thanks to all this alternative data, that this person actually probably, in all likelihood, will be able to pay their monthly interest payments, and will end up having a loan that goes to maturity, and where the whole transaction ends well. And so so we see this as a positive, but it is critical that it is done cautiously and potentially with regulation as well, right? I think generally speaking, there is good regulation, and there's a lot of talk about AI regulation, and I suspect this will be one of those places where regulators want to double click and make sure that when it's used in lending, that it's done for positive reasons and to help people.
So let's talk for a minute about where the puck is going. And I said puck, P-U-C-K, the old hockey analogy. Where do you predict, or what do you predict for the future role of AI in mortgage lending? Like I know it's happening so fast, because like right now it's just a cutesy little thing that has funny little memes. You can have it create an image of a caveman doing a selfie with a cell phone, and certainly those things are fun and somewhat entertaining. Where's this going, do you think? Like if we was to fast forward, and I don't even want to look at 20 years because I don't think we could imagine what that might be, but let's even go 2 years. Anything on the horizon you think 2 years would be much different than what it is now?
Look, this is a very slow moving industry, generally speaking. So I would probably take a 5-year horizon, only because in other industries, things that might take 2 years usually take 5 years in the mortgage industry.
Yes.
And I think, ultimately we're going to end up, as I mentioned a little earlier, with faster turn times, right? You're hopefully going to see this just accelerate the speed it takes from application to close. And this is really important because it's going to allow people in the industry to do more business, right? If they're only spending half the time on each file, they can presumably work on more files and help more people. And it's going to make customers much happier. I don't think there's a single borrower in the United States who would tell you that they wish that it took longer to close their mortgage. The second thing is, I think it should, and this is going to be really hard to quantify in fairness, but I think it should lead to lower rates, right? It's going to remove risk. It's going to remove a lot of guesswork. I'll give you an example. So for example, I think there's going to be interesting advancements in property appraisals thanks to AI. So you have tools that are going to look at homes and that are going to say, let's say you were trying to buy a home, Carl, and you got the appraiser in, and they're going to, who knows how they're going to take pictures, or maybe actually they won't even come at all and you'll just send them pictures. That's possible as well. And the AI will be able to look at the pictures and say, oh, I can see there's a cracked countertop in the kitchen that is going to cost, pick a number, $4,000 to repair. And I can see the house doesn't look like its paint is in as good condition as other homes in the neighborhood that have sold in the last 3 years. And so we think it needs a paint job. And it's going to be able to kind of assess where the home value should be relative to other homes in your immediate neighborhood, thanks to AI. And so the more accurate data you have as a lender, the more comfort you have lending. And generally speaking, the more comfort people have lending, that means even from a pure supply demand balance, if you have, the 3 lenders that would be really happy to lend to you because they're happy with the data in your file, you're probably going to get a better deal than if you only had 1, right? That's typically just how things work in the world, not just in lending. And so I think you're going to see faster turn times, lower interest rates, even if that will be difficult to quantify. And everyone will be happier. I just think this is, it remains a very high touch manual process. And I think the industry as a whole is going to benefit tremendously from, automation has been a buzzword for many years now. And there are a lot of companies working on automating tasks, but this is going to be an accelerant to that and make it, even easier to automate parts that were previously believed to be difficult to automate.
Yeah, I know I just finished a mastermind meeting with some of the top loan officers in the nation here a couple of days ago. It was like 150 high producers in the room. And we coined this phrase, actually came from a friend of mine, Steve Kiles. We coined this phrase when marketing, using it as marketing tools, that it's high touch, high tech, low time. And boy, that's a trifecta that's really going to move the needle. Hey, just real my next to the last question. What advice would you give to mortgage originators that are just starting to look at this AI and maybe integrating into their process? Like, what do they do first? Like, what advice, or not even what advice would you give them?
And I don't think that will be controversial advice to anyone in the industry, but I would say go, don't rush into things. Really be thoughtful about this. And probably most importantly, I would pick the companies you want to work with over the exact product that they're selling you today, because I think there are different types of outfits building technology for mortgage, and some will be able to rapidly accelerate what they're able to offer in the next few years, whereas others may just stick to one gimmicky product that they're offering today. And so I would probably try to pick partners that you think, what are these guys going to build in the next 12 months or 24 months that's going to be able to help me, versus only what are they showing me today.
Yeah, great stuff. And again, Chris wrote the article, AI is already shaping the industry future. It was in November's edition of the Scotsman Guide, the commercial, I'm sorry, not the commercial, in the residential edition. And Chris, you work over, I know you're the CEO and co-founder of Sonar. Well, what do you guys do over there? What is that?
We are building software for the mortgage industry, and we've built a product that we have not advertised widely yet. We're probably going to be spending more time telling people about it early next year. But we've built a product that we've called a mortgage experience platform. We set out to improve the customer experience of both, or just the experience of both borrowers and people working in the industry. And so the way we did that was by building an integrated or unified origination system that puts together a state-of-the-art point of sale with a loan origination system, CRM capabilities, and a plugged-in and embedded PP as well. So the idea is, we found, and we were originators prior to this, we found that in order to deliver digital mortgages, and we believe that digital mortgages are the future, that you had to stitch together 4 or 5 pieces of software, and it was very painful figuring out what to use and then making things work together. And we wanted to build one system that somebody wanting to, start moving into the 21st century in terms of how they do mortgages could sign up for one piece of software, and that would help them kind of have everything out of the box. If you want to learn more, we already have signed up over 100 companies this year using the software, and you can sign up for a demo or reach out to us at yoursonar.com, youursonar.com.
All right, very good. Well, thanks so much for being on here. I really appreciate it, Chris. And for our listeners, be sure to reach out to Chris. Go check out the article in the November issue of the residential side. We appreciate you guys listening. And on behalf of the crew over at the Scotsman's Guide, the only thing we ask is go give us a review. That helps to get the word out, and we really appreciate you doing that. Just an honest review is the only thing we ask for. So thanks again. And again, my name is Carl White, and we'll see you on the next episode. Thanks again. Bye-bye.